Bank of America is up more than 40% in the past year. A lot of the banks have surged. Today, though, BMO says the stock has run its course. They downgrade it. It's the market performance, a valuation call, but it's interesting in the sense of a lot of these stocks have run a lot. People still view them as cheap, not like having massive, valuations. Oh, what do you do with this call, Doc?
Well, at the Goldman Sachs Fin conference just a couple weeks back, they were talking about investment banking results being up 3 to 4%, and that was viewed very positive and part of this jump that we've seen. Consumer spending by their customers was up 6% year over year, and RBC moved their target up just a couple days ago, I think, from 35 to 38. So this is an outlier call, Scott. Time will tell if this particular analyst is right. I thought it was odd also that the call came out at like 9 o'clock last night. I don't see a lot of calls coming out, upgrades or downgrades, that far after the market has closed. Again, there's a lot of interesting things about this particular call, and time will tell. I would not be getting out of Bank of America based on this call.
Is it time, anybody think it's time to reassess where some of these names have gone, BAC included?
Look, I began the show by talking about selling out of Capital One. That's consumer finance. The reason I did that is I just have too much financial exposure with JP Morgan, KKR, Wells Fargo, USB. So there was just too much exposure. I don't like what we saw from ISM Manufacturing. I don't like what we saw from yields, and that directly lends into financials.
Boeing's in that number, though, right? The ISM Manufacturing?
It is. But I'm going to stay committed to these financials. I'm going to listen. I think trading revenue on a comp basis is going to be very strong in the coming quarter. So I want some flexibility. I want to be able to take a look at maybe a Goldman Sachs or a Morgan Stanley or a T. Rowe Price or a Schwab or something of that nature on a pullback. I just wanted to create a little bit of cash in the sector.
How about the banks?
Yeah, so we're neutral financials right now, and I think that the call and what we would agree with is that it's a relative story. So looking for those banks that are best able to execute, that have the best grip on technology. Tech spending is a huge part of the financial sector, and that's one of the...
I'm thinking back to what you said at the top of the show, though. If you're neutral on financials, how can you be neutral on financials if you're positive on small caps, which are dominated by financials?
So that is true. So when we're thinking about sectors, we talk about our sector strategy, which is a U.S. large cap strategy, and within that, we are neutral to financials. But I do think that the momentum you're seeing from the economy will help those smaller companies, and yes, the small cap does have more of that financial, more of that industrial bend, more of that value type of exposure. We think that will do well in an economy that is not going to see a recession over the next 12 months, which is our base case.
I'll give you a financial here that we don't talk about enough. It's just broken out. I think if the financials stay weak for a couple of days, it'll retest that breakout at about 220. The Berkshire B shares. Here is, in my view, one of the most perfect ways, if you're bullish on banks, but you want a little bit of a hedge. Berkshire has $130 billion in cash. In addition, massive stakes in every major bank, including Wells Fargo, which is its biggest, but also Goldman Sachs, et cetera.
U.S. Bank Corp.
U.S. Bank. They own all the best ones. So you've got a company trading at a market multiple, 20 times earnings, with I think 20% of its market value sitting literally in cash, waiting for something to happen in the market where they can actually deploy that cash. So it's almost like a built-in hedge. In the meanwhile, insurance operations are doing just fine. And they have this put where they have raised the limit at which they're willing to do stock buyback. They've barely done any. They have this authorization, they just don't use it. If there is a big market event, all that cash, they can pretty much have the flexibility to do whatever they want. Everything from an incredibly poignant acquisition to a massive buyback. So I really like this name. I like the fact that it's broken out. And even if this breakout fails, I still think stocks should hold up better than the financial sector. And so for that reason, I would bless this right here.
Scott, to Joe's point about ISM, Joe, is going away. And the reason I say that is even though it's been around a long time, Scott, the market group, they do theirs with a forward look that they weight more heavily. To Josh's point, when Joe says, well, the ISM was bad, and it was for ISM versus the ISM.
We're still talking about the banks, or what are we doing?
Well, we are, because consumers and how they feel about the economy are influenced by things like ISM and market, M-A-R-K-I-T.
No, they're
and
not.
I think they are.
Yeah, find me a consumer on the street who knows what ISM is.
Well, I mean by what the actual numbers are. So to your point, what's happening with ISM is that the ISM says, hey, things are slowing down. This is the worst in 5 months. Meanwhile, consumers are spending like crazy because that's measuring the past.
So they're
whereas
not
market
by it.
measures the future. I'm saying they weight that more heavily, Scott. That's why I say it's going away. Because who cares about what's in the rearview mirror?
You're suggesting the ISM manufacturing miss?
Yes.
Is
It's because of what Josh said. No, it's because of what Josh said about Boeing. And that's because it's from everything up to that point. It's not the forward look. So if you asked those same people, because these are both diffusion indexes, right? If you ask those same people from the ISM, what's your forward look? That's what market does, and that's what gets weighted more heavily in theirs. And that's why it's at records and keeps moving up rather than the negative that you get out of ISM. I'm just saying, watch this one.
Okay.
6 months from now, a year from now, we won't be talking about ISM.